Hey everyone, what's going on? Today I'm going to show you a sheet that I use with my clients to help them build out a budget for their team. I'm Joe Siegel from Greenlight Financial, and very often with my clients, I get questions around how much money do I have in order to bring someone on? Am I paying this person too much? How do I know if I can hire someone? And this sheet here helps you answer all those questions. Now, this sheet is something I actually use with my clients. It's a part of the workbook that we use. And this tab here is called our labor budget tab. Now, before I get into things, I'm going to break down some stuff to make sure you understand it because this sheet can be a very useful tool in order for you to help build something similar for yourself and your business, or if you want to work with us, for us to do that for you. So, first things first. In this labor budget, we had to determine how much you think you're going to make, or maybe how much you're currently making, in order to understand a portion of what your team cost. Now, before we get to that, we also have to figure out what we think an appropriate percentage of your team should be. Now, in this particular client's case, this is what we've mapped out in their revenue expectations over the next 12 months. So this was what we expected to receive. Now, the first thing you might notice is that it varies month over month, which could pose some potential challenges for when we build out our team and the predictability of consistently figuring out how much we have to work with. So now that we've chose that or seen and built out that portion, we now have this percentage here. Now, this percentage here is one that we use with our team to figure out what it should be based on your business model. This client in particular was a done for you. So they are a marketing ad agency for gym owners. And this is what they use. So 45% of every dollar they make should not exceed what their team cost is. So we're saying here that essentially they should spend about 175K on their team. If that's true, then we begin to see the trend here as it goes on, right? So 45% at 389, great, we got a lot to work with there. But as we get to months where we expect to have slower times, you can see where that's really going to create a conflict because here we have about 60K more to work with, and here we're at 60K less. So how do we plan for that? Well, there's a couple things to take into consideration here. We might look at this and say, let's take the average of what we expect to make, because in reality, that helps us build an ideal basis for what we should pay for our team. But also, maybe this is a time when you have an event. So the reason why you have an influx in your overall potential to spend on your team could be because in January you have a live event. So you've got to pay a videographer, you've got to pay, your tech support to be there and make sure that you're live on all the streaming platforms and so forth. So that could, the event coordinator and all those things. So those things could cause a major influx to your expenses for one particular month. So we don't maybe have to do the average. We just need to understand that that's a potential. Now, if this is more reflective of our ebbs and flows month over month, where we expect to have Black Friday sales for a course or something we might be selling, it might be different. In the particular case of this client, it could be like, hey, January for gyms is a very popular time to spend ads. People are trying to, go through New Year's resolutions. And because of that, we can expect that the ad spend that will come from our clients will increase. Therefore, our profits will increase if we deliver. So we might not actually need anything at all. So we're just going to have a strong January, and that's cool to know. But we'll find out in time. After we begin to do that, we now have an understanding of what our actual labor will eventually be and hopefully be around. So the next thing we want to do then is we want to add each individual employee line by line. Now, this part is a little painful because it takes some time, but at the end of it all, it is so high on the reward scale because it allows you to have a very clear insight into what your team is. So let's start here. Now, I like to do up on this top section here, our executive team, and down here are in contractors. We also sometimes add employees to the top. It just kind of depends. In an online-based business, there's oftentimes not too many W-2 employees or, payroll employees. So often it's just that we have the owner who's the payroll and the contractors are the others. In this particular case, we'll start here. I'll create myself. I'm going to be the CEO of a gym today, and I'm going to put us in the executive category. Cool. What I'd like to ideally make as a reasonable CEO is I want to make $12,000 a month. Now, you might be thinking, is that a lot? I don't know. I'm just telling you, this is what I see from my clients. 12,000. I want to drag that across here. I know I'm moving quickly here, and I'm going to try to make sure I explain things as I'm going. I'm going to drag it across because I need to make $12,000 a month to be an executive for it to make sense. Cool. All right. Let's say I do have a partner, and my partner is maybe the marketing guru. Let's call him Steve. Why not? Call it Steve. He is also the CEO. He is also an executive. And we won't put him necessarily in the marketing. Steve wants to make the same. It's got to be fair. So we're going to bring him across. All right. Same thing. Cool. Now we have us two in there month over month. Now, I put this person in here as a sample just so you could begin to see as I was getting ready to fill things in, but this is a sample person. So now I have someone here who's Amy. She is the marketing specialist and she's a part of the fulfillment team. So she doesn't actually handle internal marketing for us. And as you can see, I have these different categories, right? You saw me pick the executive. So I'm going to pause here for a sec and make sure to explain the different categories. There are different categories, and the reason why is because we want to think about the different departments that we have in order to parse out the payments and make sure that we are dividing our teams to understand what it takes to deliver and sell our product, right? I think that's important. Now, one division might cost us more, and we might need to know why. So we have operations. Operations is usually internal operations, things that we do in-house to help us flow as a company, things that we do there. This might be administrative, things like that. Next, we have our marketing. The marketing person is usually, to me, the person that uses the ad spend and finds a way to create new work for us, right? So there's strictly internal marketing, not for our clients. And they remember, this example is of a gym owner that does ad spend and marketing for fellow gym owners. So we don't want to confuse that there. So this particular person, Amy, would not go into marketing. She actually serves as fulfillment for our clients. So we're going to keep her in fulfillment. Next, we have sales. Sales is our person who's getting on that call and closing the deals, making the sales calls, bringing us new gyms. That is who we pay to be our sales team. This can also be people like setters, people that literally help from start to finish create the sale of the new work for our business. And then, like I said, we have the fulfillment. These are the people that actually help us deliver our product to our clients. They fulfill that service or need that we are doing. Again, if it's a course that we have, this could be a coach for us. This coach is a service, an internal thing that helps make sure our students successfully get through our course, right? So Amy is fulfillment. She's making sure the marketing is good and that the gyms are getting the leads they're looking for. These are trainers trying to get new clients into their gym. So we're going to keep it in fulfillment there. Now, Amy might be from another country, so we're going to put Amy at $1,000. So we find that full-time contractor, what we need from Amy, $1,000 a month is what she needs, and that helps us work exactly with what we need, right? I'm going to drag that there. Make sure we have our totals at the end. Next, we're going to have Lisa. Lisa is going to be our setter. And next, we're going to put that into sales. Cool. And I think we could say that for every set that Lisa gets that goes to close, it's going to make $250, right? Let's say that. But the challenge with that is that we need to have a cap on probably how much the setter can do. So realistically, the setter can't do more than, let's say, 20 sets that are probably going to close. So we're going to go here and out. This might be a little bit odd for you because you're going to probably say, well, you're putting in the max. I always build it around the idea of what the client or what the employee could absolutely achieve at the max. Now, I could do it as a percentage. If it was a salesperson, salespeople typically make between 10 to 15% of overall deals, but this is a setter. And for me, I like to build it out of the max potential because we need to understand that this person could close and we're going to need to be able to pay. Now, if they don't make the max potential, that's not great for us as a business. Obviously, we want them to be the best that they could be, but now we're prepared for it. We've budgeted and planned. We make sure we have enough cash, and it's not going to hurt us if they don't reach that potential. So we're going to put that setter there. We'll put the setter is going to give us 20 closes, and that's going to maintain our cash flow. Awesome. Next, we need a salesperson. We're going to put Mike on sales. He is our closer. Put him on sales here. Now, in Mike's particular case, he's going to do a percentage. We're going to say he's going to get 10% of all sales. Perfect. And we're going to also add here 250 per close or per set close. Cool. So 10%. So we're going to go 10% here. You get to see all the real stuff in action here, all the formulas behind the scene. Awesome. So he's going to get 10%, and we're just going to drag that across. Now, even if Mike isn't the primary seller, let's say we have a couple sellers, closers, I should say. Sorry. We also have Bob. Bob's another one. Bob's your uncle. We also have, let's say, Scott. Scott is also a closer. What we can do here is ultimately the closers as a whole are never going to see the closers as a whole take on more than 10%. So we don't have to build out another thing for them. We can even just group them together. So we might just do this. We're going to bracket them. Perfect. And go, here's the deal. The closers, the sales closers all together make 10% of all sales. Whether Mike gets 20 sales and Bob gets 10 and Scott gets 5, or however they shuffle it around, ultimately it will never exceed 10% of whatever cash we collect. Perfect. Now, we do need some admin people. So let's just go with admin here. We're going to call this just an admin for now. Internal, let's say admin. I know, so original. And we're going to put that into operations. Hey, this person is typically going to make $3K a month. That's for 40 hours. Perfect. We're not going to expect much more there. They're just a contractor. So we're going to drag that across again, make sure we're here. Perfect. Awesome. Let's think of what else we might need. So we've got some of our operations. We're probably going to need some fulfillment. Let's say client success, right? And we probably need a client success manager. Perfect. For these two here, and now normally, just so you know, I would put those position titles here. So we're just kind of cheating the system. We're going to call this fulfillment. Fulfillment, perfect. Let's say this client success is going to be 2K, and our manager is going to be 5K. All right. Drag these across. Perfect. Let's see, what else are we missing here? I feel like there's some more people we need. Oh, we need some more internal marketing. Now, I said before that Steve was my partner and he does handle most of the marketing, but I'm still going to say here that I want let's say a marketing, let's just say we're going to have a marketing guru. Bear with me there. But our marketing person is going to cost us 6K a month. So we're going to add that 6K a month. Perfect. We're going to drag that across because, again, we want to make sure to put that in for every month. Now, I'm going to stop here because I could go crazy and just continue to add more and more people. And I want you to just get the general theme of things. So I think you've got the idea of making sure we cover all the departments. Now, this is not going to be 100% accurate for building out the full team, but the way we use the information is going to be identical. And here's how we do it. So we're going to take this information and go, okay, great. Now we know what we plan to make. We know what percentage should go to our team, and that's the amount we should spend. Where are we at in regards to that? So you can see here now, our actual labor is a lot less. Now, I have some questions. Now, the question for me is, well, what is our percentage then? Where are we at percentage-wise? So if I scroll down here, I go here and I go to look at the effective rate. Now, the effective rate to me is how much our team cost us in comparison to how much we make. So right now, that total labor that we just built out, our team's only costing us 21%. And now you can see at our lower months, it might be closer to 28%. So we can get a little bit higher when we only make 250K versus 390K. And that's a big thing that's important, right? So for me now, I'm looking at this going, okay, cool. Maybe this team is, not so bad. We might need to add a few more people, but we've got room to do so if we need to. And what kind of room do we have? Well, this thing here that says delta from target tells us how much cash we are from the overall amount. So if, in April, for instance, we have 50K we could still spend, and we would hit our 45%, right? Then we could see that, right? And so we've got that for each month, right? We can begin to see that. Here's our average percentage so far, right? We can see that it's 35%. So this is a great way for us to really understand what our team should be as a percentage, how much cash we have to work with, and who else we might be able to add. The other cool things that we've added into our sheet is we allow you to see the totals by department. Who is kind of the kryptonite of the business? Who might be costing us the most and doesn't create the greatest ROI on their investment and what we pay them to do as a service? As you can see, we're very sales heavy and executive heavy. Our sales team directly relates to the cash that we have coming in, and we expect that to be high because if we win, they win, right? So it's a win-win for both of us. The executive team as a whole, we're doing so much for the business that we expect our salaries to be to some extent because as a CEO, you are literally probably putting in 80 hours, 60 hours. I mean, you're not afraid to give the business what it needs, right? And even if you're an efficient business owner who works less than 40, that's totally fine. In reality, to me, you're still the person that's going to care about the business more than anyone else and know it better than anyone else. And when the time comes, if something bad were to happen, you know how to fix it and will put in the time. So you should always be compensated appropriately for the fact that you are the CEO. Next, we can actually look at some percentages. Now, here's some ballparks of what I aim to look for when I think about my teams, especially for a done for you. Now, this is a done for you specific. Now, in this particular scenario, we don't want our sales team to exceed 12%, and it doesn't. In our lowest month where we have what we have, our team doesn't exceed 12%, right? Next, we have our operations. We have some margin there, some marketing, and then our executive doesn't exceed 10%. Now, this was not intentional, but it worked out well. As an average, it's still lower in those strong months that we have. Now, this last little piece here I put in green is something that I really like to use for my clients to help them understand. If you have margin on what you spend for your team, like we did, it could tell you that you could spend less. But sometimes I build out a team and the team actually costs more than the 45%. And then the client wants to know, how much do I need to make then for this team to be at the right percentage? Because I can't let go of people. I need this team in order to deliver my service. So how much do I need to make? So here's an example. Now, this one says we could make 212K in the month of January and we would still be at 45%. We'd be totally fine, right? So let's say I add in here another, I don't know, let's call it 150K. Just gotta put it there for the sake of just this example. It says now, like, hey, in order for your team to be 45%, you need to make 587K. And that's what you need in order to get there. So you're not on track right now with where you're at to be at 45% until you get to this number if your team doesn't change. So this tool becomes really useful to look at those pieces. You build it all out. I highly recommend that you take this time. Like I said, this is something we do as a mandatory thing on the first onboarding call where we dive into our clients' numbers, go through their books, tell them what looks good, what looks bad, and help them understand what their team costs are. This is something that we do with them. So if you feel uncomfortable with this element and aren't sure how to kind of attack it, then reach out to us here at Greenlight. And this is something that we can help you do so that you can begin to budget for your team and properly know how much you have to spend on future people or plan for growth. So anyway, thanks, and we'll hear from you soon.